Hello, Deep Value Investors community. This video is in response to Jason. It's a two-part question. Question one was, once the quarterly reports start coming out, which areas there'll be a further sell-off? So this is only my opinion, and I have no position in any of these companies. But I believe that within the SaaS, software as a service, I believe that we're going to see quite a substantial sell-off to continue further. The reason being is this. Within software as a service, investors are paying a large multiple for recurring revenues and revenue growth. Now, the recurring revenue part is what investors crave, is that visibility and predictability into the next year. They want to know how much their company is going to make over the next year. So that's the recurring part. But what investors also demand is the revenue growth rate. Now, if the economy suffers, as it's clearly going into a global recession, the recurring revenue part will still be there right now, but the new contracts coming in are not going to be here. So, for example, companies that have a potential to defer any IT spend or part of their digital transformation journey, they're going to defer that off until there's visibility into their own projects. So as the economy goes into a global recession, many companies are playing for survival. You look at hospitality, you look at retail, you look at airlines. The whole bunches of companies are really now playing for survival. So anything that is non-essential, anything that was kind of a wish list in IT spend is going to get deferred. Now, it's important to be selective within this group. So, for example, companies like Adobe, which I have no position in, but Adobe, I believe that the share price has come down significantly, and I believe that the sell-off there would be less than in other companies. Furthermore, in the case of Adobe, they already reported that their revenue growth rate is going to take a small hit. So we already have some kind of idea there that things are going to kind of come down a little bit. Now, with other companies like Salesforce specifically, that's going to really, that company is really going to struggle, because that company has, its organic growth is really tapered off a long time ago. It made two acquisitions, one which is about 5 billion for MuleSoft in 2018, and Tableau in 2019 for 15.7 billion. So 21 billion combined. So over 2 years, that has been spent in inorganic growth. The company Salesforce has not got that level of organic innovation pipeline anymore. So this kind of company that would have typically used peers' low valuations to acquire them, with the credit markets also kind of drying up, they're not going to be able to launch into inorganic growth, although this would have been a great opportunity. In the case of Salesforce, they have approximately, let's say 4 billion of net cash. You might have some more gross cash, but it has some debt, about 2 billion. So that sort of business is not going to be able to continue with their inorganic growth. So it's going to be hit with a tapering off of their organic growth, and it's going to have fewer contracts coming in. Secondly, as well, it's important to remember that in the case of Salesforce, wherever possible, the competition is very intense there. So Salesforce is a premium platform. Now, a lot of the cases, it's like a one-stop shop, and you can it does hit a lot of the large enterprise, but for the smaller companies that require something slightly more specialized, Salesforce is not able to really able to tailor to that segment of the industry. So I believe it's gonna be one of the companies that will struggle more than investors are pricing in. So as always, please subscribe. Thanks for watching. Bye bye. The second part of the question from Jason was, what are my views of investing in a Dow index or on the S&P? So the Dow is very different from the S&P 500. The Dow, to be a constituent of the Dow, you have to fill in some special requirements, such as you can no longer be in a high growth mode. So, for example, Apple is part of the Dow, but Amazon is not. So there are special requirements. And for example, a company like Walmart makes up a large part of the Dow simply because of how much its shares are valued at, its specific shares. So the Dow is not my favorite type of indexation, but I'm a very strong believer in buying an ETF such as the S&P 500. The S&P 500 is it's slightly better because it's diversified into 500 companies. So Warren Buffett himself made a bet, I think it might have been in 2009 or something, with one of these funds of funds. And the bet was that the guy, I can't remember his name, he could have made, you can look this up afterwards, the guy made a bet that his five fund of funds would beat the S&P, and Buffett said that over a 10-year period that the S&P would beat his five fund of funds after fees. But the irony actually turns out to be that since that point, looking to as of right now, Buffett hasn't really outperformed either the S&P. So it just goes to show the power of the S&P 500. It's a very powerful machine. So I hope that answers our question, and please get in touch. Thank you. Bye-bye.